Hi, this is Indraneel and you are watching Business Bites in our channel The Spotlight, India's first online business news channel. In today's Business Bites, first news we have Reliance Industries to form new company for the FMCG segment, which will be called as New Reliance Consumer Products Limited. Second news we have, new age startups are aiming to raise around 18,000 crore through their IPOs this year. Third news we have, beauty and fashion retailer Nike's early investor set to offload stake worth $150 million via block deal. Fourth news we have, HDB Financial Services listed at 835 rupees, which is 13% premium over its issue price of 740 rupees on NSE. And fifth news we have, Tesla's second quarter sales declined by 13% while their China shipments increased in June this year. In first news, Reliance Industries to form new company for the FMCG segment, which will be called as New Reliance Consumer Products Limited. Reliance Industries Limited is set to restructure, which is aiming the group's all of its fast-moving consumer goods, that is FMCG brands currently part of its retail ventures, into a new company so that the company gets specialized and focused attention besides drawing investors focused on these segments. The unit that's going to accommodate the FMCG brands is to be called New Reliance Consumer Products Limited and will be a direct subsidiary of Reliance Industries Limited, much like Jio Platforms Limited. Reliance Industries Limited's chairman Mukesh Ambani has indicated IPO plans for the retail and telecom businesses, when the restructuring exercise will help to ready the retail business for a share sale by spinning off the FMCG business, which could have inflated valuations when Reliance Retail Venture Limited has a valuation of over $100 billion. That's likely to make the public offer, if it materializes, will be one of the largest in recent times. The FMCG business was worth 11,500 crore in financial year 2025 and features over 15 homegrown and acquired brands such as Campa, Independence and Ravelgaon, when other acquisitions include jam and sauce brand Seal, regional beverage brand Socio and shampoo brand Velvet. Reliance Consumer Product Limited, which is responsible for manufacturing, distribution and marketing, sales the product at prices that are 20 to 40% lower than rivals Coca-Cola, Mondelez and Hindustan Unilever, besides offering higher trade margins. This has led to a price and margin war at a time when Indian consumers are shifting towards branded groceries and daily necessities. In second news, new age startups are aiming to raise around 18,000 crore through their IPOs this year. A dozen new age companies that have filed their draft IPO, that is initial public offering papers, this year will collectively raise over 18,000 crore, which is more than $2 billion through fresh issuance of shares, and this trend is signaling towards growing confidence in public market as a fundraising avenue even for mid to small startups. E-commerce platform Meesho expected to file its draft prospectus confidentially soon, and it's targeting for 4,250 crore, which is going to be the largest fresh issue in this cohort, and it will be followed by edtech firm Physicswala at 4,000 crore. Indian startups are increasingly eyeing local stock exchanges for their listings, driven by robust valuation multiples in the public markets and growing maturity of the domestic startup ecosystem. Multiple internet companies with foreign domiciles have moved back their base to India to be listed in India. When of the 12 companies, half are taking SEBI's confidential route to file their draft prospectus, which allows them more time to finalize the size of their IPO as well as to keep their financials under wraps until such a time they decide to go ahead with their public issue. These include Grow, Physicswala, Shiprocket, Boat, Shadowfax and Meesho, which is yet to file. For other companies, the reasons to mop up fresh capital vary from meeting working capital requirements and repaying loans to funding expansions and investing in research and development, though the valuations for companies will depend on market conditions as well as their business performances, including profitability and cash flows. In third news, beauty and fashion retailer Nike's early investor set to offload stake worth $150 million via block deal. Harinder Pal Singh Banga, founder of a Hong Kong-based conglomerate, the Caravel Group, and one of Nike's early investors, is set to sell a 2 to 2.5% stake in the beauty and fashion retailer in $150 million US, which is about 1,285 crore block deal. Banga, who has been gradually paring his holding in Nike, currently has a nearly 5% stake in the company owned and operated by FSN E-Commerce Ventures Limited. FSN E-Commerce nearly doubled its net profit in the March quarter from a year earlier to 19 crore, when their operating revenue rose by 24% year-on-year to 2016.7 crore, which is driven by customer acquisition, brand partnerships, and network expansion. The company was taking a cautious approach to quick commerce, where Nike has been piloting its quick commerce services, Nike now in selected pin codes in Mumbai, Delhi, and Bengaluru since last year. Nike presently has a market capitalization of 60,568 crore, when the shares are being offered at 4% discount to Nike's closing price of 211.8 apiece on a BSE, when the buyers are foreign institutional investors. In last August, Banga sold a 1.43% stake for 851 crore via an open market deal. Prior to Nike's IPO in November 2021, Mr. Harinder Pal Singh Banga held an 8.7% stake, while the company's promoters, the Nair family, continue to own 52% and have not sold any shares since the listing. In fourth news, HDB Financial Services listed at 835, which is 13% premium over its issue price of 740 on NSE. HDB Financial Services IPO comprised a fresh issue of 2,500 crore with an offer for sale of 10,000 crore by HDFC Bank. HDB Financial Services is the most subscribed billion-dollar IPO since the Zomato issue 4 years ago, and the largest non-banking financial company, that is NBFC IPO so far. HDB Financial's IPO was subscribed 16.69 times on the final day of bidding on Friday. The qualified institutional buyers portion was subscribed 55.47 times, while the non-institutional investors or high net worth individuals portions and the retail investors portion were subscribed at 9.99 times and 1.41 times respectively. The NBFC's market capitalization was 69,704.3 crore, while the market value of its larger peer Bajaj Financial stood at 5.73 lakh crore, when Bajaj Financial has been able to maintain high growth and high asset quality, which HDB hasn't been able to achieve. Despite good issue price, HDB Financial Services needs to demonstrate strong growth in consumer finance, which makes up almost 24% of its book and remains a grey area for the company. According to the analyst, investors can hold the stock for 2 to 3 years perspective, as HDB Financial Services is a structurally constructive bet. Despite trading at a discount to Bajaj Finance and Cholamandalam Finance, HDB Financial Services is an upper layer NBFC that offers a well-diversified portfolio and a granular loan book that makes it a long-term buy for new investors as well. And in fifth news, Tesla's second quarter sales declined by 13%, while their China shipments increased in June this year. Sales of Tesla electric cars fell sharply in the last 3 months as boycott over Elon Musk political views continue to keep buyers away. The company reported a 13% reduction in sales, when in another sign that Musk's embrace of US President Donald Trump has had a deep and enduring hit to Tesla's brand appeal. In the first 3 months of this year, Tesla's net income fell by 71%, as sales fell to 384,122 in April through June, down from 443,956 in the same period last year. Sales of the models 3 and Y totaled 373,728, above the estimate of 356,000 from Wall Street analysts. Tesla is also facing steep competition from other electric makers, especially in Europe, where China's BYD has taken a bite out of its market share. The new figures come as the company is focusing less on coming out with new models and more on robots, self-driving technology, and robotaxis. On the other side, Tesla saw its first increase in vehicle deliveries from its Shanghai factory this year, with the US automaker potentially buoyed by the clearance of regulatory hurdles for its advanced driver assistant features. Tesla delivered 71,599 units from the plant in June, according to data released by China's Passenger Car Association, which is a 0.8% increase from a year earlier and up by 16% from May this year. The year-on-year increase may signal a turning point for the electric vehicle pioneer in China, where it's navigating a relentless price war. The government last month unveiled new guidelines that could pave the way for further deployment of Tesla's more advanced driver assistant programs, potentially offering a crucial competitive edge in a market that increasingly prioritizes intelligent vehicle technology. So these were the top 5 business newses from Business Bytes in our channel The Spotlight, India's first online business news channel. I would like to request you to please subscribe this channel so that you can have all the updates from our end. Thank you very much for watching Business Bytes and signing it off.